Polymath, actually, we're on our third life, right? First one was, building applications on Ethereum. Second one was building our layer 1, right? Layer 1 of Polymesh and launching that. Third version of Polymath is what we're doing right now, right? And some of my presentation is leading into that, but it's really building an end-to-end system actually for private securities. So just a bite of history, and there's people would recognize that there's little nuances in my presentation, and other people would realize this as well. But how many people know when the first exchange actually launched? It was in 1602. Who's good at math? That's 420 years ago. Anybody going to get the connection? 230 years ago, May 17, 1792. That's where this imagery comes from, and some of this data point actually comes from good friends of mine actually out in the audience, and I see him smiling there, Ted. 24 stockbrokers signed an agreement that would set the rules actually for trading, right? But what signaled this agreement, right? What signaled this agreement and why it needed to be signed was there was a financial panic in 1792, right? And similarly, actually, all financial panics typically actually what's the outcome of that is change, and typically change for good. What came of the last financial panic that we all recognize, right? That was a panic of 2007 and 2008. Well, blockchain and Bitcoin actually emerged, right? And before Bitcoin, actually, the central banks were experimenting in electronic currencies, and during that time frame, and the last panel that I was on, actually I mentioned that I spent a decade running around the world installing digital wallets that were holding electronic currencies. And electronic currencies actually that allowed people to be in the financially inclusive actually in the marketplace. Otherwise, it was just physical cash that was being moved around in a lot of these markets. So Bitcoin was born of the last financial crisis that we have. So what are we in right now? In this winter that we're in, well, we're in a bit of a crisis of our own, right? We're in actually what I would like to call actually a changeization, right? Where everything actually ending here is a endingization. But it's the digitization, the securitization, fractionalization, democratization, and globalization, right? And the changeization is what is stimulating this next thrust. The end-to-end digital platform that will power a private securities platform. Digitization of markets have evolved since 1792. 1971 was the year that the NASDAQ introduced electronic trading. The markets have moved ever so slightly. We're all wanting to get to a settlement period of T0, and this is what we're all pushing towards. But we're also looking at how do we democratize this industry? How do we actually make it inclusive for other people to participate, right? We have to ask actually the uncomfortable questions why do we have the players and the roles that they are in today, right? So ask the uncomfortable questions, look at the business models that are here, and take down actually the pillars that have emerged over time. Securitization is the securitization of products and securitization of these real-world assets. Fractionalization is the fractionalization that comes from tokenization, right? And these opportunities they create opportunities for the retail investor, right? Digitization enables efficiencies. Tokenization extends these efficiencies to custody and to settlement, and the settlement layer leveraging actually these leveraging smart contracts and capabilities for a lot of these corporate actions. Tokenization opens up the opportunity for allowing democratization and globalization of a lot of these local investments as well. And tokenization will also democratize investor opportunities while reducing the traditional barriers, and the traditional barriers that exist today. So what is that change agent? Well, that change agent we like to actually think of is tokenization. So tokenization is faster and lower cost for asset transfers, fractionalization of securities, as we said. It creates increased liquidity. There's a lot of automation that's created because of that, through creating the token, then to tying that into a smart contract and executing actually on that smart contract. There's reduced complexity and risk and cost. through removing all the counterparty and credit risk and scoring. And ultimately, at the end, what we're trying to do, and I think what this entire industry is trying to do, is to create that secure, trusted environment for people to be able, for people to invest with confidence. And with confidence, that would mean is that, as I said, in version 2 of Polymath, we created our own blockchain. And on that blockchain, what we've done is introduced a process of KYC, know your customer, KYB, know your business, and we're also introducing another KYA, know your asset, right? So the ABCs of building a trusted environment where investors can invest with confidence and know what they're investing in. So this industry is actually being tracked by many participants. There's a lot of players around the world. We're a participant in this as well as others, and we're helping to push this industry forward. And who has been tokenizing? Well, since 2017, Daimler-Benz issued a €100 million bond on a private version of Ethereum. 2018, the Swiss Stock Exchange introduced a fully integrated solution and platform. 2018, also, the World Bank issued a first bond that was created and transferred actually via a blockchain platform. And as you can see, actually, as we're emerging in this market, and you can get this data actually off of Black Manta as well, is that each of us are providing and filling in the categories as far as what we are providing, right? So in the earlier version, the only aspect that Polymath was looking at was tokenization. We've now extended that, and we're building, a complete full stack end-to-end platform. So I'd like to coin it as we're the Shopify of private securities and platforms. It's a white labeled solution that will help, push the industry forward. Bring your own license, we bring the tech, right? And it's a perfect partnership actually where we can help push this industry forward together globally. And who really cares about actually security tokens? Well, there's a traditional investor and there's the crypto investor, right? The traditional investor understands and invests in traditional securities, and the crypto investor, well, they understand and invest in digital assets. But in the middle there, that's the intersection of security tokens, and this is where we're building actually the environment of trust, right? Because both parties actually need to trust each other, and the only way they're going to do that is actually if you build this cohesive ecosystem of trust and a platform actually that's built with all actors on the chain, knowing all entities and all parties. And I'd like to actually just close off with a quote from, a friend of Polymath, which is Patrick Byrne, who's CEO of Overstock, and how he actually identifies a marketplace for tokenization. It's in his view, it's about $1 quadrillion worth of fractional ownership around the world. From our point of view and from our platform, we're seeing a lot of opportunities, for tokenization of real-world assets, from the real estate verticals to tokenizing racehorses to tokenizing vintage wines to you think about it, even sneakers, right? If you want to participate and you've got a sneaker collection, tokenize it. They increase in value, and you could sell that actually at some point in time, but provide real return actually to the investors that will participate actually in this industry and that will own the tokens that you will be issuing. And that's my speech, and I've got 50 seconds left. Thank you so much, everybody, and if you want to have a talk with us, we're right in the back. The Polymath team is here. We'd like to have as many conversations as we can to push this industry forward. Thank you so much.